Hi and welcome to Disruptive Innovation. My name is Elias. I'm a former airline pilot, and today we will be talking about how I managed to increase my stock portfolio by 42% in just 3 months. So today we will be looking at my personal portfolio, value versus growth stocks, different sectors, and lastly volatility. So let's start by looking a little bit on my personal portfolio. Now, I'm not able to disclose everything in this because this is part of our Patreon page and our highest level of membership called Platinum. So the Platinum members are able to see everything in the personal portfolio and all the stocks that I buy and sell and that I hold in the portfolio at this present time. However, we will be looking at the growth rate and also the returns that I've managed to get in the last 3 months. So if we start by looking at the returns, on the left graph over here, you can see that I manage about 14 different stocks. And the line over here, the dashed line, the red one, represents a 7% year-over-year average gain, which you can expect from most of the indexes. In this case, it's the Dow Jones index. It could be any. What analysts normally say is that you can expect an average gain of about 5 to 7% year-over-year. Some years, obviously, it's going to go up much more, and other years it's going to go down. But average, looking historically, it should be somewhere around 5 to 7%. Now, as you can see, most of them, 13 out of the 14, are on the upside at the moment. There's just one which is slightly on the downside. I expect that one to go up in during 2021 at some point. But as you can see, most of them are somewhere average in the region of 40% or so. And this is only in the first 3 months. Now, the reason for this, and I'll get more into that later on, is because I focus on disruptive innovation. That means that I focus on companies and innovation that I believe will be part of the future and will be disruptive in some way in their specific sector. Now, that means a lot of volatility at some points, but we'll get more into that later on. So looking at the right-hand side over here, we have a graph that represents the growth rate. And with a start of August 2020. The orange line here represents the Dow Jones, which has moved up quite significantly. So as you can see over here, initially it has moved fairly equal to the Dow Jones index, but something happened over here. This was in late 2020, where you can see that my portfolio just started to go almost vertical. And the reason for that is because people start to realize that this company or this stock has huge potential because of multiple reasons. And that's when people start to buy in. And when people start to buy in, the stock gets momentum and it just goes up and up. At some point, it might stop a little bit, it might stagnate, and it's going to continue to go horizontal for a while. It might even go down a couple of percent. But eventually that is because it has grown so fast that people start to pull the brake a little bit and start to consider at what value that stock should be. However, if the fundamentals haven't changed at that point, then there is no reason to sell off. Just hold the stock and wait for the next wave to go up. If you're interested in seeing the full portfolio with all the details in it and all the stocks and also all the information about the amount of shares that I have, the bought price that I got in, and the diversification, the values and returns, I have a full breakdown of that in our Discord server, and the way you get access to that is that you head on to Patreon. There's a link in the description below. We have 4 levels of membership, and they are called Light, Premium, Pro and Platinum. And at the Platinum level you'll get full access to this as well as live Q&As, and you'll also see my watch list and so on. Now let's talk a little bit about the difference between a value stock and a growth stock. Value stocks are stocks and companies that are established, companies that have been around for quite some time. And examples of these are, for instance, Apple, Amazon, Google, Facebook, Netflix, and so on. These are huge companies, big companies that have gained momentum for quite some time. They have built up a high value at some point and stability as well. So this means that the stock it might not go up and down as much, but year over year you should expect a annual gain of somewhere between 5 to 7%. Obviously some years it's going to go down much more, other years it's going to go up, but average it should be somewhere around that. Now, these companies might have lost momentum a little bit because they might not always innovate as fast as they did in the past. And you can see this as an S chart, for instance. So you have an S that goes like this, and initially it's going to start off pretty slow. And at some point, again, the innovation is going to pick up and it's going to go a little bit more vertical. And later on, it's going to reach the top of that S, and that is when the company has matured. So during that mature state, you cannot expect as much gain as you did in previous years. And that is why I tend to look at the growth stocks instead. Now, a value stock like Apple, for instance, was a growth stock at some point. However, when it reached its mature state, then that is when you need to start to look at the new Apple or the new Tesla or the new Google, for instance. And that's what we do over here. So a growth stock, on the other hand, is a stock which might have a really good product already. They might have been around for maybe 10 or 20 years, but people haven't really realized the potential in that company. And one really good example of that is Tesla. Tesla started up already back in early 2000, and Elon Musk, who is now the CEO, he joined back in 2002. Now, they built their first Model S and later on the Model X quite a few years later, but people still didn't realize the potential in that company. And it's not until the last couple of years that people have really started to pick up the interest in Tesla, and that's why we've seen such a big growth in Tesla stock the last 1 or 2 years. If you look at the Tesla stock chart, you can see that it has just started to pick up momentum. Now, most people will say that Tesla is overvalued, but it really comes down to the fundamentals of what you take into consideration into the stock value. Now, there's a big difference between the potential of a company and the value of a stock. Those two are not related to each other. It is really important to differentiate between those two, because a company who has huge potential might be really overvalued if you look at the stock, and it might be really undervalued. Now with Tesla, for instance, most people would think that it is overvalued. However, I think it is at the moment undervalued. And the reason for this is that the fundamentals of the company and the potential is so big that people haven't really caught up to that yet. People look at Tesla as a pure car manufacturing company, and that is what it probably is at the moment. But what they have in the pipeline is something completely different. Now they have the Tesla solar roofs, they have the battery storage and the battery production, and they also have the Tesla Auto Bidder software. And probably the most important thing is the Tesla full self-driving feature, which is going to come out later this year. Let's pick up the current Amazon stock chart from 2010 until 2021. And let's just play that we now move into the future about 10 years time, and this chart now, instead of representing Amazon, represents Tesla. So looking at it now, Tesla has moved up quite significantly. It moved vertical at some point. Where do you think that Tesla was back in 2021 looking at this chart? Now if you ask me, we are somewhere around here, which means that 2021 we are still at the bottom of the S-curve. Now, bringing back the actual Tesla stock chart, the current one which we have right now, if you compare them side by side, you will see a huge difference. And this is where it gets difficult, because it is difficult to estimate an exponential curve. It is much easier, and this is all human factors, it is much easier for people to estimate a linear curve, so a curve which is just going straight like this, but estimating an S-curve that goes like this, which is exponential, is extremely hard. So that is why looking at the Tesla chart today, it looks really, really overvalued. However, people were saying the same thing about Amazon back in 2010. So we've talked a little bit about growth stocks. Now, which stocks should you then buy? Well, I'm not a financial advisor. However, I can tell you that we are going into the future and we can see 5 different sectors that might be merging at the same time, which are all going to be disruptive in their own sector. So the 5 sectors that we are focusing on is electric vehicles, cryptocurrency, biotech, robotics, and 3D printing. A few examples in the electric vehicle sector is obviously Tesla, NIO, Lucid and Rivian, where Tesla is obviously the biggest one and the most popular at the moment. Tesla and NIO are completely different when it comes to the fundamentals and their actual products. For instance, Tesla, they use a supercharger network, whereas NIO, they use battery replacement instead of charging. In the cryptocurrency sector, we have obviously Bitcoin, Ethereum and Doggy at the moment, which is becoming really popular. Also moving on to biotech, we are looking at stocks like CRISPR, Pacific Bioscience, for instance. As well as robotics, we have stocks like Baidu, Timbal, etc. And also in the 3D printing sector, we look at stocks like Materialize and Exxon and other companies. What's really fascinating about disruptive innovation is that it is really difficult to estimate what the impact is going to be of these specific companies and the innovation that they have. For instance, if you go back to 2006 when Apple revealed their first iPhone, no one really expected what would happen in the years to come. And we are now in 2021 and most people cannot live without their iPhone. If you would have asked most people back in the early 1900s, where there were mostly horses and carriages around, what they wanted in the future, they would have told you a faster horse. And the reason for that is because a lot of times it is difficult to know what you need until you've actually tried something else. And the same thing happened back in 2006 with the first iPhone. After people started to use it, they couldn't go back to their old phones. And this is what we're seeing is going to happen in these 5 sectors moving into the future. Now let's talk a little bit about volatility as well. If you look at value stocks, so stocks like Apple, Amazon, Facebook, Netflix and so on, these stocks have much less volatility than looking at some of the growth stocks that we mentioned in the past. And the reason for that is because a lot of people are invested in value stocks, they know what to expect from those companies, and they know that those companies won't go bankrupt tomorrow. Growth stocks, on the other hand, are more high risk, but at the same time, they have a much higher potential of gaining anywhere between 1 to 10x. Again, looking back in history, at some point Apple has also gained 10x, but the thing is you have to identify those stocks before they move into that category of becoming exponential. And that's where it starts to become difficult. Now you have to bear with the volatility and the high risk in order to be able to gain from the possible profits of those companies. So you have to create enough conviction, study the stocks really well, and believe in the stocks and the innovation enough for you to be able to invest at the early stage at the bottom of the S-curve so that you can be part of the exponential growth. If we take Tesla as an example, just looking back the last few weeks, you can see that Tesla has gone down somewhere around 35% in just a few weeks. Now a lot of people are gonna panic and they're gonna sell out. And the reason for that is because they have a lot of fear. They believe that the stock is going to go down even more, maybe the market is going to go down even more and Tesla is going to follow. However, if you create enough conviction and you believe in the product and the innovation, you will realize that this is a huge buying opportunity. You're actually going to be pretty happy that it went down 35% because that's going to open up a window for you to invest even more. And at some point, if you're invested in a growth stock like Tesla, for instance, and you intend to hold that for the next 10 years, then this is just going to be a bump on the road. So if you like the content, please consider to like and subscribe. And if you want some more, again, we have a Patreon page where you can sign up to become a member. That's going to give you direct access to our Discord server as well, where we try to find, analyze, and invest in companies that we believe are part of the future. So thank you very much for tuning in, and remember to always invest in the future.